Hello and welcome to all. Given that it's a virtual event, I'm not actually sure where people are dialing in from. So I will cover all grounds and say good morning, good afternoon, and good evening from wherever you're dialing in. My name is Anna Felton. I am a partner at EY. I focus on the TMT sector within the corporate finance
welcome
division.
to all. Given that it's a virtual event, I'm not sure people are dialing in
now
from.
hearing,
I will cover
we're
all
just going to continue. Hopefully it's only me that hears the echo. I'm going to shortly introduce my panel here today. I've got a fantastic panel, two amazing women on the panel today, and I'm going to give them the opportunity to introduce themselves. We're then going to have a few slides from me just setting the scene and then get into the debate. We've got 25 minutes and not a minute more, I'm told, so we're going to get through quite the agenda in that time period, and then we're going to allow some Q&A on a different platform. So looking forward to it all. Before we kick off then, I'm going to let my panelists introduce themselves. So Maria, CEO of Readly, would you like to go first?
I'm Maria Hedengren. I'm the CEO of a company called Readly. It's a category leader in digital magazine subscriptions in Europe.
I just wanted you to introduce yourself, Maria. Sorry, while I do that, I'll try in the background to get rid of the background noise.
Okay, Maria, if you want to go on mute while we're moving on to Maxine, investor at Northzone. Do you want to go from here? Can you hear me all right?
Yeah, sure. I hope there's no backfeed here. But my name's Maxine. I'm based in Stockholm, and I'm an investor with global early stage fund Northzone, which is a generalist fund kind of investing from seed to Series B across Europe and the US.
Perfect. Thanks to both of you. It's great to have you here. As I said before, I'm going to start with a few slides setting the scene, and hopefully I can share my screen here with you. I'm going to ask my panelists to confirm that we are seeing my slides. All good?
Yeah, we can see it.
Great. So the topic of today is the tech industry in the wake of the pandemic. And we're actually going to cover a few areas within this, some I would say related to this title specifically around volumes and values around tech investment, but then also slightly broader around what it's like to be a woman working in the technology industry that I know both of my panelists have some very passionate views about. So I'm looking forward to get into that as well. But I thought if you could bear with me, I will talk a little bit about something that's close to my heart because I do that every day, which is M&A and capital investment into the technology sector. So the first thing here, the first slide is really I think worth spending a bit of time on. So as you can see, 2020 was another record year for software M&A in the Nordic. We're now sort of over 300 deals per annum classified as software. And this is, of course, in the backdrop of the pandemic, COVID-19, which, to be honest, I would not have called this to be another record year back in March when all this turbulence started. So I think that's noteworthy. The other thing I would say is clearly this is not just a Nordic trend, but also something we're seeing globally. And one thing I would call out on this slide for those eagle-eyed of you in the audience is you can see private equity. There's also strategic players, and that has been traditionally the meat of the acquirers into technology, continues to be the case. But what is really interesting is that there's quite a lot of what I would call other, so new type of players entering the scene. As software is eating the world, we're seeing more and more other type of acquirers entering into this arena, buying capital, buying knowledge, buying know-how. And this is driving, I would say, a lot of the activity we've seen in the last few years. And hopefully we can come on a little bit to that later. The other piece I wanted to just setting the scene with and highlight is, of course, activity or investment activity is driven by valuations. So within tech, what we tend to talk about most of the time is enterprise value over sales or sales multiple. So how many times are investors able to pay over and above your annual turnover? And this, you can see, has also been trending upwards, which is no surprise. More M&A activity tend to drive more M&A activity, and that's often driven by high valuations. And this is something I know we're going to come on to in the panel discussion, but I think it's worth highlighting that in 2020, again, the year of the pandemic, Nordic M&A valuations was at an all-time high. That means investors are even more willing to pay the highest valuations for software companies than ever before. And I think that is noteworthy. And again, it's a global trend, as you can see, at least long-term, but specifically in the Nordics. And we're going to talk a little bit about that as well in the panel discussion. And finally, just a note on IPOs. And of course, Readly has recently gone through an IPO themselves, and I know Maria is going to comment on that later. But another, if not record year, but second highest year in quite some time, 2020. And what's interesting, I think, on this slide is you can see, Sweden has been one of the driving countries in terms of IPOs in the past, but actually over the last few years, and particularly in 2020, other countries in the Nordic have also been gathering pace, particularly in Norway, which is something I'm following quite closely, given that I have a few deals on in that space. So some interesting food for thought here. I'm going to now try to stop sharing. And again, I'm going to rely on my panelists to give me the green light that we're off the shared screen. Does that work well? Okay, perfect, ladies. We can get into it. I'm going to start with you, Maxine, because we've just seen some slides around, the capital flows into software, and that we're in all-time highs this year, in the wake of the pandemic, right? So given your sort of background and currently with Northzone, what are your views on the levels of capital currently flowing into the tech sector? And specifically, is it sustainable? We will continue to see these all-time highs going forward.
Yeah, I mean, I think the answer is partly twofold. I think, first of all, there's like an unprecedented amount of capital in the ecosystem right now. You have private investors through equity investments like ourselves and the big P guys, you have debt, you have governments kind of forming all over the world, and especially in Europe, kind of with France, like really kind of trying to help and encourage the ecosystem. So kind of as a startup or as a company seeking to raise capital, I'm not saying you can pick and choose, but you can try and figure out what kind of capital you want into your company, which obviously affects, the kind of company you're building. So I would say that the level of capital right now, is it sustainable? Let's see, but there's tons of money in the system, which makes my job like infinitely much more difficult. That's not the point. And then kind of talking about the tech part of things, I mean, I see the share of capital going into tech that will only increase over time. Like I personally think the term tech is not a sustainable one, because look at how we looked at like electricity 150 years ago. It's not like we call them electrical lamps today, right? We call them lamps. So in 10 years time, everything is going to be tech. And it's just a matter of kind of understanding, where to kind of place the bets now. But I think it's that I do see as very sustainable.
Great answer, Maxine. I'll echo all of that. I'm going to go to Maria, just because, and from a slightly different perspective, you've obviously dealt with a lot of investors in your career. What do you see as the key ingredient to successful capital raising?
Well, I guess I can only speak for my own experiences, but I think one really important aspect is to have a very clear explanation of why you will win, which is what's called an equity story when you're out raising funds. So what is the uniqueness about your business, and how large is the addressable market? And I think if you're a company or a person that has been around for a while, I think also it helps to have a very proven track record, both that the business has a proven track record of how profitable or how much it's growing and that it's succeeding, or that the founders or management or the board have proven before that they have the ability to win. But often, if you're a startup, then you don't have a long track record. Maybe it's in the beginning of your career as an entrepreneur or founder or manager. And then it's not so easy to show a track record, but it's really about showing that there is a real need in the market and how you are going to to fulfill that need in the market in a unique way that very few or nobody else is doing. So that has to be super clear in any case, I think, when you're raising funds. And then I also think, I don't know if Maxime will agree to this, but I think investors love business models that are recurring revenue models so that it's predictable. So that you find a way to charge your customers, not upfront, but over time, so you can monetize long term on the transaction, and that you have a scalable business model, that there is no direct correlation between cost and revenue growth, for example. And then just show that you can live up to your promises and that you know your data, because when you go out and ask investors for money, you can be sure that it's not the first time you're going to be in that position. So you will want to raise probably money again, hopefully from the same investors, because it's always easier to create the relationship with a few investors that will support you over a long time. Or, you know, investors talk. So to have a good credibility and track record, and think of it as a long-term relationship where you will have to be able to deliver and over-deliver on your promises. I think it's important when you go out and raise money that you look at this, that I need to be able to go back and feel proud that I delivered what I told them I would, and then it will be a lot easier every time you want to raise money again. So I think that is sort of
super answer, Maria. And I would just add to that. Obviously, I advise a lot of companies and founders and entrepreneurs that are out raising capital, and it's really about telling your story, telling a coherent story. And I think a lot of people maybe don't think about it that way. But it's certainly true. You're going to go to an investor who, you know, has a background, has knowledge, but hasn't heard your story, and you need to be able to, in a coherent manner that sort of fits together and is passionate, tell your story, and that's really how you're going to, you know, get them on board. So I don't know, Maxine, if you want to jump in on that, or
No, I agree. Like, it's all about storytelling and it's all about selling. And also, one thing from my perspective is, like, don't forget that we are selling too. Like, I have to sell myself and Northzone into the companies that we want to invest in, because the best ones will obviously probably have a couple of offers on the table. So kind of have that in mind if, you know, if you're fundraising or in that type of discussion. Like, we're also in sell mode.
Great points there. And I'm going to ask you, Maxine, again to add to a different question I had, and then we're going to pivot a little bit into a slightly different theme I know we're all passionate about. But the last one on the current market and sort of valuations and so on, you guys must be scratching your heads, right? Valuations are just so on that slide. And you know, I know the average is kind of 4 or 5 times, but actually for the high performing businesses, we're talking way beyond that. And it must be really hard as an investor these days to know, what is a fair valuation? What am I going to be able to stand behind when valuations have really taken kind of, you know, a little bit of a life of their own? So a comments on that would be good.
Yeah, no, 100%. It's insane. And I think, like, the beauty of being a VC investor, though, is, like, I don't know if I'm good at my job for another 10 years. So let's see kind of on the other side of this for the fun. But no, I think what 2020 brought on was, like, this, you know, onset of European valuations catching up with American ones, because we saw a lot of kind of US investors actually coming here, because obviously now they could, and they could compete on the same kind of level as European investors could. So we've seen so much activity from the likes of Sequoia and Benchmark and Bessemer, and even in recent. So I think that's one part of what's driving valuations. And I think from our side, it's super important to kind of understand fund economics and understand kind of how big is the fund, how big do we need our investments to become, and what do they need to return, and that kind of then defines how much we can spend on companies initially. I think we are very comfortable paying up for companies that we just know are going to be huge successes when you have that connection or whatever it is with the founders. But I think the difficult thing is being able to kind of step back, because I mean, I'm always kind of very informal and transparent when I speak, but like FOMO is a big driver of deals being made, especially in my industry, which is like super early stage, founders raising money, pre-product, perhaps just a pitch deck, perhaps sometimes not even a pitch deck. So it's like you have to kind of balance those two elements off and be quite conviction-led, I think, in understanding industries.
Very good answer, Maxine. I think you still agree with me that only the future will tell, right? We made the right bets, and I think we're in that kind of
like worth mentioning, I guess, is Hopin, which we invested in like over a year ago at seed pre-COVID, which just recently raised $400 on like a 5.
Q&A later. I'm sure people would want to hear more about that. But I'm actually going to pivot us onto, I know, an area that's very close to all of our hearts. We're sort of a panel here of 3 women, all fairly senior within tech. And I would sort of say that's not maybe the most usual setup. And I thought we should talk a little bit about that, the gender equality or inequality within the technology industry and what we need to challenge and what we need to do better. So Maria, the first question for you, could I ask you to share a sort of real gender diversity moment, something that made you realize that we've come a long way on the gender diversity agenda, or indeed realize that we have a really long way to go?
Yeah, I get these moments, unfortunately, quite often, where I'm like, wow, we haven't gotten any further than that. And I think the most recent aha moment for me was the other day on International Women's Day. I don't know if you saw the cover of Dagens Industri. It was, really pictures say a lot more than 1,000 words, where they put up pictures of all the CEOs of listed companies in Stockholm. And then they put them in gray, and the women were in color. And it was very illustrative of how few, it's only 12.5% of the CEOs on the stock exchange in Stockholm that are female. And I think there are so many people, individuals, as well as organizations that are doing a great job in raising awareness of why gender equality is good business, and how women are being, founders, for example, or women raising money, and women in different type of situations, that there is a glass ceiling or they're not raising as much money as men. So there is a lot in the media right now, but when you actually look at the data, you don't see that much of a needle change actually. And that is a bit discouraging to me. I'm sure we all look at Albright's report, and not nearly enough has happened over the last 10 years. So I guess I'm a bit discouraged. But a positive thing is, I was very, very happy when Seventh AP Fund sued Google for sexual harassment things going on in their organization. And I think that really illustrates how important the capital is. That has a massive, I think, influence over sustainability and gender equality when investors, but VC, private equity institutions really start demanding that their portfolio companies have a conscious way of working with these questions. That is when it's really going to happen, a lot of things, I think.
Really well said, Maria. I agree with that. Maxine, I'm going to ask you to do the same. Maybe share a moment where you thought we need to do more, or equally, listen, this is really good and we made some progress. It would be great to some thoughts from you as well.
Yeah, I mean, I'd love to kind of highlight good things, but I think what I think International Women's Day and the whole week around it, what I think it should be used for is kind of highlighting the fact that we're not there. I hate to be like a party pooper, because I want to be like, hey, happy Women's Day, but it should be like a day to kind of actually remember and kind of highlight the fact that we're just not there. And I think similar to Maria, this whole week, I love the initiatives coming out. I just wish that they weren't just so concentrated to one day, and kind of having that, I don't know, it's so weird. One good thing though is that I've stopped noticing when I'm in a meeting with only women, and that would not have happened 2-3 years ago. Today, I'm fortunate to work in a fund where 50% of the investment team is women. So it's not often that we have a female partner, myself, and then someone else kind of on a call, and then the entrepreneur happens to be female. And I've stopped noticing. And that's one actually pretty good thing, because I think 5 years ago in banking, I would have been is this a meeting? Is this actually taking place? No, someone else is coming. So I guess that's it.
Well, I'll add to it if I may, if you allow me, because I do have some positive news that I reflected on International Women's Day as well. So we've got a number of new analysts in the team. We did one of those walks, a sort of team walk, but on Teams. Obviously, we're in London and it's all locked down, so we're not actually meeting in person. But we did have a sort of session on it, and a few analysts that are all female, they reflected on that 50% of the cohort of new analysts this year is female. So they're, and they sort of reflected on that themselves, and that's something they hadn't expected. And then the older of us on the call, myself included, sort of, reflected on, well, what was the situation when we started? And it was obviously very different, sometimes you forget what only was the reality sort of, 5-10 years ago, where that would have been very unusual. I think it was 1 out of, 15 or 20, whereas now 50-50. That must be, a positive change, right? So I started with that on International Women's Day, and it ended up made me feel very good about the whole day. So that was good. I'm going to then ask another question of you, Maria. So you touched on this already. Obviously, the success that you have with Readly, and also I know in previous parts of your career, I think is noteworthy. And you've had a lot of dealings with institutional investors as well. And you sort of touched on this already, but I'd like you to elaborate if you can. Really, do you think that's the answer? It has to be led by investors if we're going to see some real change around the gender imbalance?
It doesn't have to be. I think there are a lot of different parts of society that need to come together. So it's not only the investors, but I think they do have a big impact. And, a lot of studies show that it's actually good for business to have gender equal businesses and female leaders and females on the board, and so they grow faster, they're more profitable. So it should be part of the checklist that any investor go through but it's not yet. I'm sure a lot of businesses are getting better at it, but I'm sure there is a lot more that can be done in that regard. But it's also about actually men. Unfortunately, again, we are dependent on the men, but I think until more men are also on the barricades for good business, which is gender equal businesses, I think it's going to be very slow. Maybe I'm a bit negative here. I want to be more optimistic, but I think there are a lot of parts of societies that need to come together to make this happen. That's my opinion.
Yeah, great on that, Maria. Maybe Maxine, can I ask you to elaborate on that? Because I know in one of the previous funds you work with, you actually were part of, developing a specific D&I framework and what that looked like. And there were some learnings from your time at Kinnevik that you could share. I think that would be
of course, happy to. Because I agree with you, Maria. Like, it has to come from above, be it like, bosses in an organization or investor or, whoever kind of has that power to kind of put demands in place has to kind of make those demands. And at the end of the day, it's all about perspectives, right? Diversity, be it gender or, race or whatever, it's just a matter of getting different perspectives. That is never not a good thing. So it's like, I can't understand how slow it is. But yes, at Kinnevik, where I was before, we were building out this super impressive D&I framework, which actually, I don't know any other investment vehicle to date in Europe that actually has that in place, but that had a very specific kind of framework on both internal goals, where the organization would be at in terms of gender equality, but also on portfolio companies and on new invested capital. So actually stating that 10% of all invested capital per year would go into female-led businesses or female-founded businesses. And if those 10% weren't invested, they would roll over. So it's not like you could miss 1 year and then just, have another shot at getting those 10% the other year. It would be 20% to kind of actually put that pressure. And I honestly, I learned and kind of evolved so much during that process too, because it's not like that you actually need to kind of dig deep and kind of, think about it through in your core to understand that this is like really good. And it's about kind of understanding where the funnel leaks and why, because it's not like, firms are turning down female founders in investment committees. If that, they don't even get in front of the investors. So kind of where is that funnel leaking, which is, I think, a good piece of work to do and exercise looking to own networks and kind of own circumstances that you move around it.
I couldn't agree more, Maxine. I think there are changes that needs to happen throughout society, and I think it has to probably start a lot earlier than where people are currently focusing on intervening. So I couldn't agree more on that. I'm terribly sorry because I feel like we have so much more to share and discuss, but we're out of time. I know there is a dedicated Q&A session, so hopefully we'll get some questions on the other topics that we maybe wanted to cover. But I really want to thank my panel, Maxine and Maria, for joining today. It was been fantastic to talk to you, and fabulous to have such a great sort of panel of women in tech. Hopefully that gives people who are listening into this and watching this sort of hope for the future as well. So we'll see you all in the Q&A session shortly. Bye.
Perfect. Bye.
Thanks a lot, everyone.